Andy is in Illinois. Hi, Andy. Welcome to the Dave Ramsey Show.
Thanks, Dave. Thank you for taking my call.
Sure. What's up?
About 3 months ago, my wife and I did a 1035 exchange from our whole life policies into fixed index universal policies of $125K each. We rolled about $7,600 of cash value into those new policies. We're paying about $190 a month for those. Now I'm having second thoughts as if we should have done that, or can we use that money?
So you did an exchange to protect the taxes on $7,600, and not even all of it was taxable?
Yes. Yes.
What kind of fees did you pay to do that?
I didn't pay any fees on it. I just got a tax form at tax time, just said I had the income on it that was not taxable.
Mm-hmm. So why would the $7,600 be taxable?
Well, I don't think it's taxable. It's just that was the cash value that I moved from the whole policies into the fixed index.
But I mean, the only reason to do a rollover of the cash value is if the cash value is taxable, and it almost never is, because your basis in a rip-off whole life policy is the total of the premiums you paid in. You paid in more than $7,600.
Right.
So you can close this whole thing down and have no tax event, can't you?
Yeah, I just I know you've been talking about the whole life insurance, not a good idea. Just go with term. So
no, I'm just saying, if you wanted to go that way, and you said, okay, I'm going to have some inexpensive term insurance, I'm going to do investing of my $7,600 and my $190 a month into good investments. You don't have a tax event if you do that, do you?
No, my only concern is the surrender charges is about $6,000
on the $7,600.
Yes.
Good Lord.
Yeah, I think I got into something that maybe I shouldn't have.
Yeah, I think you got screwed.
Yeah.
You got screwed.
Yeah, so I'm wondering if it's worth taking that loss.
Yeah, it is.
To go forward.
It is, because the problem is that the money, it's the $200 a month that you're losing now. $190 a month is going into crap, and you've already established that it's crap, and yet we're putting more money in it. And so that's the downside. It's not what the $7,600 could become. It's what that $2,400 a year is becoming, and that turns into money fast. That's a lot of money. What do you make a year?
Our income for the home is $130,000 a year.
Yeah. I thought you were making good money. So really, honestly, the truth is, at the end of the day, 20 years from today, if we set fire in the middle of your kitchen table to $2,400 a year, and we set fire in the middle of your kitchen table to $7,600 once, you still are going to be able to build wealth. And here's the good news. Here's the good news. We're only setting fire to one of them. To free up the other one, right?
Gotcha.
Yeah. So I mean because the problem is that you're adding more to an investment that's not going to do well and has extremely high fees.
Okay.
That's the bigger problem than the dadgum. Man, I hate it though. Doesn't it turn your stomach to lose that $6,000? God.
Oh, it stings. That's the part that I understand what you're saying. And I
bought a rip-off when I was a kid in my 20s. That way I learned all this stuff was I bought a rip-off. Man, I got screwed so bad. Northwestern Mutual whole life, which is like one of the worst whole life policies out there. I mean, it's the worst math on the thing. And I bought the thing, and I was dumping. I didn't have a lot of money. We were making like $30,000-$40,000 a year, and I'm dumping almost $200 a month. This is in 1980s early, right? Almost $200 a month into this thing, but with the promise it was going to build cash value. And so I was overpaying for my insurance like 10x, 12x in order to build this cash value. And then when I canceled the thing 2 years in, I had a zero cash value because for the first 3 years they keep all your money as fees. And so I had that same experience of, getting a little throw up in your mouth,
Yeah, definitely. That's kind of what I'm going through now.
And it's more intellectual than it is actually mathematical. But the good news is I'm 60 now, so that's almost 40 years ago. And you know what? The good news is I've never done it again.
Yeah, that's good.
Yeah, the memory was thorough. So, and I talked to a whole bunch of other people out of getting ripped off too. So, yeah, I understand the emotion is my point, and I don't blame you for that. Good news is $6,000 in your world's not that much money. You're going to be okay, and it's better to stop doing bad investing from an intellectual standpoint, a mental health standpoint, and a financial standpoint, because you know you're getting screwed. You don't want to just keep putting money in that pocket. There's a hole in the pocket.